All right, another quick update here because I was looking at this like an hour ago and I was actually saying to myself, if the Nasdaq and markets continue to climb, then we may form a specific pattern on SoFi Technologies. So I figured I'd jump on and show you what I'm looking at here. So SoFi, of course, SOFI, been a really big winner for us on this channel here. We looked at it a while ago. A lot of people were jumping ship back when the stock was hitting new lows of 6. I doubled down, said in my opinion I'd go big. And you can see obviously the stock has rewarded investors, but I just wanted to point out that even though markets are climbing up, you can see this in the Nasdaq and in SoFi as well. Almost does look like the stock is wedging, right? It looks like we do have a potential wedge taking place, and I know it's a little after 1:30, so it's mid-afternoon, so a lot of people might not be expecting this reversal, but I mean, also at the same time, you could potentially say we're triangling as well, but I guess it would depend more on the Nasdaq probably. But even if you look here quickly, I'll go back to SoFi in 1 second, but you can see also something like this, right? If we draw out our support trend line there, technically we just broke support, so we might actually be breaking right here. And if this is our high, right, you can see how we were coming down right here. We go against the body right there for the most part, touch up with those tops, and you can see how we're potentially breaking here. So we might have a little bounce off the fib here and come right back into this potential wedge that's forming, or we might start to break right now as we speak at about 20 to 2 in the afternoon. But either way, I wanted to just point out SoFi because the stock was at about 21.20, and I said if it can get up to 21.40, we could potentially form what looked like almost a bullish hammer on the day. So if I back up here, I just want to show you what I'm looking at. SoFi has been on an absolute tear. We were watching this upward channel here, and then we saw the breakout, and you can see, look at this, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. In the last 15 sessions, SoFi has been red only once. If we stay green today, that would be 14 out of 15 of the last sessions green for SoFi, breaking up and out, potentially testing these new highs that we just touched on Friday. And if we do happen to pop up here, you can see that this top trend line meets up basically with this top fib right here, our golden ratio 1618, and you can see about 22 3/4, right? It'll probably slightly break up potentially and maybe hit the psychological level 23, 23.10, and then maybe pull back. But I just wanted to show you as well that, where is it? Okay, yeah, we climbed up, got above the trend line, had a pop, and then you can see as we came down to drop almost similarly to today, right? We dropped like a full point almost. You can see the high 20.25, the low 19.62. All right, so we only fluctuated about like 60 cents or so. But anyway, the point is we had the big pullback and then we formed kind of that bull hammer, and then we continued to pop up and have green days and hit new highs, right? And now today we had a big drop and a retest, same thing, where we kind of slightly engulfed that previous day's candle and then we popped up. And now that's why I'm bringing this up, because if we do potentially close towards the top end of this range of the day's high, then we could potentially form another bull hammer, and that can cause us to pop up and get to 22 plus, right? That could potentially happen tomorrow, which of course would be new highs. But depends if markets want to stay up. Pointed out that wedge, right? So we have to see if that wedge wants to start to break now as we head into the last couple of hours into the later afternoon, or if markets just continue to stay green and stocks always go up and we continue to climb. I also wanted to mention that we had yields up as well, right? Usually when yields go up, stocks go down, which is why I always like to keep an eye on the 10 and 20-year yields for you guys and try to mention that anytime I see some movement. But we were up about 0.5% on both the 10 and 20. I know some people watch, the 1, the 2, the 30, but I watched the 10 to 20, and we were up about 0.5% on each. And now you can see we're here at a 0.14% and about 0.2%. So yield started to pull back a little bit, which in theory helps stocks go a little bit higher, right? Oil had a big pullback. I know we, of course, headed in the opposite direction, which I technically did mention could potentially be a fake out that the market could pull. on investors. And you can see that while we had a potential bear flag forming, we actually ran up and met up with this bottom trend line, met up with this moving average a little bit. And then you can see how as we started to head towards the top of that range, we had the big rejection and we dropped down now to about 67 a barrel, down about 2.25% today. So in my opinion, I actually still think this is going to happen. And this is the long-term triangle again. If I back up for you again, well, you can see how, see, it almost looks like we're in this long-term triangle, and we spoke about the premature drop, and then we had the Middle East conflict and everything like that, right? And then we had the bear flag, or what appeared to be a bear flag, and then we had the fake out and the retracement to the 20-day, and now you can see the big drops, and we are potentially going to start heading back down here, in my opinion, back to around 60 a barrel, potentially sub 60. So we'll see how that plays out. We also had silver climb up. You can see nice spike right there, essentially almost right to that fib, hitting a high of 39 12 and a half, I guess we'll call it, an ounce. So we broke above 39 an ounce. I said, in my opinion, all the way back here when we were talking about it, you know, I have arrows back here when I was doing updates and whatnot. And you can see back here, we're talking 32, right? 31, 32, $33 an ounce. Now it's almost $40 an ounce. And remember, that's silver. A lot of people, again, I told you, you guys think I'm kidding. And if you're doing it yourself and you're not, you know, an expert, and believe me, I know some of you out there are your accounts are absolutely raging, and believe me, bless you, more power to you. I really hope the snowball continues to roll for you. I really do. But the average investor, you can see how sometimes your emotions overwhelm you. You end up selling a stock too early, or you hold on to a stock too long, you know, hoping and praying that it comes back for you. Or you get into a stock too late, you didn't do a lot of research, and now you overpaid and it slowly starts selling off, right? So you guys see sometimes how difficult it can be over a 6-12 month period to secure gains in total of your overall portfolio, even if you're talking 10, 20, 30%. And I know, again, people see big returns with the options, but if we're talking about big money and, again, playing it kind of conservative, protecting what you have while growing it, then, yeah, again, I just want to remind everyone that the average advisor on Wall Street, you know, if the clients are lucky, 10, 12%, 15% really good year. So if you really think about it, right, if you had a big chunk of change, and I mentioned this years ago when I started the channel, I always mentioned that in my opinion, you guys should diversify. That's why I like to look at a lot of different types of companies on this channel, large, small, tech, industrial, doesn't matter. And also, I would always mention that you should have hedges in place in case markets decide to throw everyone a curveball. And again, that can be something investing into the VIX and just waiting for that big drop, the volatility to rise, and then boom, you can make money on that type of hedge. Or of course, as you've seen, gold and silver rallying up, hitting highs. And that's the point I'm driving home, right? So just over the last couple of months, as you see here, we're heading back to April, we're going back beginning of the year, February, March. I mean, we're talking 32 and change even, right? Even if you got in near the top trend line. If you caught the breakout, you're up 20% right now on silver, not on a stock, on silver. And in my opinion, again, you can see a price note up here of roughly 50 an ounce, we'll call it. In my opinion, that's where it's going. But again, that's just my opinion. Whatever you do with this information is entirely your own prerogative. But we've been right so far. But again, just driving that home, you know, some people struggle to see 7, 10, 12% a year overall in their portfolio. And you're paying fees for that. Right? And here we have something like silver, nice, simple, common sense move by yours truly. And again, we didn't even really have the breakup and the climb like gold had, which again, I think, in my opinion, is coming, long overdue until for silver, in my opinion. But again, 20% roughly, you're up inside of just a handful of months on a commodity like silver and a hedge. So I did want to speak on that as well. But SoFi, again, we are up here, and you can see we slightly pulled back. There's that break that we were speaking about. And you can see a break here. We actually did break below that fib level that we were talking about, and now you can see it's trying to reclaim that 20-day. So we'll see maybe if we potentially start to make lower highs now and we start to trend downward, kind of in this downward channel, and we have a rejection here, because I'm surprised we did rage all day. But you know, as stocks climb and people see green, they want to see more green, so people kind of keep buying. But overall, just a quick recheck here. SoFi, we're up to 23.5 billion market cap right now, PE of about 50. Yeah, so we could potentially be overextended, of course, because again, even if we fast forward and we say the company's going to do 4.5, 5 billion in revenue for 25, again, 23.5 billion market cap, right? So we're trading, 4, 5, 6 times this mark already, and with a PE of almost 50, again, we could potentially be viewed as overvalued. But a situation like this, in my opinion, I think it's going to continue and follow these technicals. I do think we pop up here and test this mark and potentially make that new high of almost 23, or maybe slightly above 23. And then we can start to pull it back down to earth and maybe drop it here. Maybe you can get a gap fill right there, right? Which is looking like about 19 and a third, roughly 19 and a quarter. But we are on the up and up. And even if it may seem overvalued and you feel that you missed it, obviously, that sucks. But what do you notice here? Again, this is why I do the channel the way I did, and this is why even when I would speak to clients on the phone, I would do it the way I did it. Again, I didn't want to present myself always as the best salesman. And at the end of the day, you can see why. Because it comes down to the growth of the portfolio and buying stocks that are viewed as undervalued, fair valued, and getting that almost quote unquote guaranteed growth and return, right? So basically, going off on a slight tangent, but coming back to the original point, is you can see how the fundamentals strengthen over the years for something like SoFi, right? This seems to be a solid, sound, growing business. So that's why money is continuing to flow into it. Because even if they're late, the hedge funds here at 21, they pop it up, they start, they continue to buy at 23, 24, and then it pulls back to 18, 17. It's not a big deal for them, because in my opinion, the way they're looking at the scaling of and the growth of these revenue numbers, they're looking at it at 30, 35 already down the road. But the reason why you're seeing some of these stocks just continue to climb is because now, in my eyes, people are doing fundamental hunting. And they're looking for companies like SoFi that have this type of growth. And that's where they're deciding to park their assets now, even with markets at highs, even with stocks near their highs. Because they know that even if a pullback and a big drop happens over the next year or so, those are going to be the ones that are going to continue to perform and continue to increase in value. And that's why, again, something like an Arcat, I mean, listen, shout out to you guys, any of you who are in something like an Arcat. Of course, you can see big jump up today. It was up about 9-10% earlier. It's continuing to run, getting back to that SPAC level as we anticipated, right, of about $10 a share. I mean, this is what I mean with these meme stocks. But also at the same time, in their defense, I'm sure you guys heard that Hegseth came out and basically rolled back a lot of regulation and wants to beef up the drone orders and start to work kind of like that military aviation angle. So that's why you're seeing a lot of these drone companies like Arcat having these big runs today. But in all fairness, again, we did say that it could be volatile, and I just kind of pointed out that you should keep an eye on the support, and you can see it technically broke the support, and then that Hegseth news came out, right? Because we were talking about how these fundamentals aren't too solid and that it could break all the way down here to about 3, in my opinion. That's where it really should have gone. And right as it broke the support and was on its way down, what happened? Hegseth came out with the news, boom, all of a sudden the stock's back in play and we're climbing back to $10. And we were just down here at sub 7, right? So sometimes that's how it is, right? One announcement can change everything. And you can see, look at the volume that came in. I mean, the most since before the bull dropped. So that's why, a stock like this could be in play right now. And even though these fundamentals aren't too strong on something like Arcat, just the fact that a lot of smaller investors are looking at this as a stock that's still under $10 a share, because apparently people tie the value of the stock to the stock price. And again, technically, I mean, it is, but it's not, right? Someone will look at this and say, this is only $9 and Campbell's is $30. This is the cheaper stock, right? But we know it's the stock price times the number of shares. That's how you get the market cap or the value of the business, right? So looking at the market cap of this company, if this is a small up and coming drone software tech company that could potentially get more orders down the road and start to get smaller government contracts and get these little base hits and these little upgrades, then yeah, we could easily double up and we can go from about sub 1 billion up to about 1.82 plus billion. Very, very possible. But again, something like this is a little risky because you're kind of banking on a Hegseth announcement or an army contract to come in, right? You and I both know you're going to need that catalyst, especially with something like Arcat that doesn't have the solid fundamentals to back it up. Otherwise, it's going to break. But if you want to value hunt, again, if you want to find specific kind of niche stocks like that, like people were looking for, like the aviation stocks, the drone stocks and whatnot. So if you really want to take a shot, value hunt, and find a company that has been beaten up a little bit, and we're talking about a market cap of a couple of 100 million. Again, this was recently 700 million roughly, and then boom, we had the announcement, we're back up to roughly a billion and change, right? So if you want to try to, find those little beaten up sub-billion-dollar stocks, I mean, by all means, it's your money. You do whatever you want with it. In my opinion, I would wait for the proof in the pudding and wait for the contracts and the revenue to actually start coming in. But just something to keep in mind for Arcat. And again, I saw it was up big, so I just figured I'd mention it. But the video was really about SoFi. And again, in my opinion, it's the sound fundamentals. That's why, as other traders, again, who missed this ride, they're sitting here, they're looking at the market cap. It might look overvalued to them. They see a PE of 50, it might look overvalued to them, right? But again, in my opinion, the way smart money is thinking, it's the opposite of that. They're looking at this. And they're basically saying to themselves, again, even in a volatile market, even in a market climbing up to highs, even with this stock heading near highs and testing new highs, making new highs, it's still going to continue to showcase value for you over the next 12 to 24 months because of the strength and the growth in the fundamentals. But that's all I have to say about that. So I'll end it there. Stocks by the numbers. Thanks for stopping by, right? Thumbs up, share the video, all that stuff for the algorithm, right? Help a brother out. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me, help you. But more importantly, moving forward, like I always say, I understand markets are rocky, volatile, and very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for your time. Have a good day.